Hey everybody, it's Dusty Martin from Platinum Living Realty. So yesterday I did a market update on 85266, which is the zip code I live in. It's the borderline luxury market, or depending on the neighborhood, just the luxury market. It's a little higher end. You don't really see anything under about 500,000 in that neighborhood. And then, so I had some people ask, well, hey, what about this zip code? So 85254 is currently and for a long time been known as, quote, the magic zip code in the valley. And I know there's a lot of agents who roll their eyes at that and they think it's cliche and it's kind of dumb, but there's a reason it makes it so desirable, easy to sell, harder for buyers to get into. And one of those reasons is because it's a little quasi line between the Phoenix and Scottsdale border. So a lot of that zip code actually has a Scottsdale address. So, and feeds into Scottsdale schools like Horizon High School, for those of you who aren't familiar with the area. Horizon being one of the most sought after and popular, well performing schools in all of the North Valley. Oh, I got people blown up. The minute I go live, that's when people text me. So, but anyway, Horizon High School for a long time, 20, 30 years now, has been one of the most sought after schools in the Valley to try to get your kids into. But the other thing about being on that border right there between Scottsdale and Phoenix has to do with the fact that you have the prestige of the Scottsdale zip code and the Scottsdale schools, but you're actually paying Phoenix City. You're getting city services like water and trash and the taxes. So, and that's one thing that people don't necessarily understand. So you've got the lower fees for the city of Phoenix, fire, water, trash, etc. But you still get all the benefits of having a Scottsdale address. That's what makes it really desirable for a lot of people, outside of the fact that it is really close to the 101, the 51, all the dining, all the places that people want to be in the North Valley without having to go too far north or out away from easy freeway access. So that's kind of how that zip code got its name and the moniker, the magic zip code. So there's other zip codes now in the valley that are just as desirable: 85050, 85054, 85255, and 266. It's just, it depends on where somebody wants to be for that particular, for their school needs or how close they want to be to the freeway. And so I've started calling a couple of the other zip codes that are real close to there, that are super highly desirable and still have really high performing schools and are still close to the 101 and the 51. I've kind of been lumping those in for, probably about a year now. But that's where that came from. So let's jump into the numbers. So active listings in 85254 year over year are actually up 45.6% over last year. So right now it's got about 246 active listings. So for just one zip code, there's really not a lot of homes on the market still. So even though it's up almost 50% over last year, which means there's more inventory than there was last year, it doesn't really mean much in terms of seeing any kind of major correction. Now, the sold listings haven't changed. So that's one thing to keep in mind. So there's a little more inventory. It's getting a little bit easier to find inventory in that zip code for people, but it's still pretty limited. So for example, this time last year, there was 106 sold listings year to date. So what we're seeing is we're starting to see, how I talked about yesterday, our market's going to correct. We are headed towards a recession, but it's not going to be that huge bubble, the big ups and downs like we've experienced for the last decade. We're going to be transitioning into a more normal, a normal economy, something that's a little more stable. What we just went through is something that really usually only happens once in a lifetime, and we're lucky to be out of it. So think the Nike swoosh. We had the big drop down and the long trail out. So our median sales price, though, in My hair's looking fabulous. Hey, you know who it is? It's Jen Jones over at Desert Ridge Ulta. Go see her. She is the best girl in there. She does amazing stuff, and she makes my wild, unruly hair do amazing things. So that's just a plug and a shout out to Jen. Go see her. Anyway, so back to what I was saying. The median sale price per square foot in 85254 is up 11.4% year over year. So even though sold listings haven't increased and the inventory is up, the value and the prices of the homes have still gone up, and that's because there is still a shortage, and we're still going to have a shortage through this entire correction or recession, whatever you want to call it. I think sometimes people get a little worried because for so long we heard the term recession, and it really was like a borderline depression. And so every time people hear recession now, they kind of flinch. They've got a little bit of, it triggers a little bit because it was so bad for so many people. But the key to remember is that most recessions are very small. That's a recession. Depressions do this. Recessions do this. So we're going to go back to having normal recessions. Normal, you can think of them as corrections. So the median sales price is about $231, a little higher per square foot. And June of last year was only about $207.60 something. So last year, this year compared to last year, we've got about 11.4% increase in value, which is great because now our interest rates have gone down. A lot of people are getting interest rates below 4% again, which is lower than it's been in the last year. And before things correct, this is a really good opportunity for sellers to get out of their property, take the biggest chunk of the money they can, but then also for buyers to buy before rates go back up to 4, 5, 6%. So statistically, like this, and numbers wise, this is a really interesting time. It's a good little bubble here in the next couple months for buyers to get in at lower rates and have more buying power, but then also sellers to take advantage of the increased value that they got over last year, because it's going to kind of even out. So the main difference between 85266 and 85254 is the number of luxury properties that you will see. So even though 85254 does have luxury properties, does have multi-million-dollar homes, it doesn't have as many. So you're still going to see like an upper middle class and mid to higher range number of properties or value of properties, but the month supply is actually up 45.6%. Now that sounds like a lot. That's like almost double what it was. But the thing to keep in mind is that the month of supply in 85254 is only 2.3 months worth of supply. So anything under 4 is a seller's market. Last year it was 1.59, 1.6, something along those lines. So you're going from this white hot seller's market where sellers can push above whatever the latest comps were pretty hard, and but now we're starting to see that correction. It's moving back towards a more even, stable market for buyers and sellers. And so even though it's still a seller's market, you're going to see people who, my hair's doing funny things. You're going to see people who are still trying to overprice the home and sell it at last year's value or even January's value, and it's not going to work. Buyers are going to walk away. Appraisers are not going to appraise. They're going to have it overlisted. It's going to sit on the market, and then it's not going to sell. They're going to get frustrated with their agent. Why didn't you tell me? This is where you need a data nerd to come in and say, hey, this is where the trend is. Comps only told you what happened yesterday. You have to look at the inventory to know what is happening today, not yesterday. We don't care about yesterday. We don't care about last year. We care about what's going on today. And that's what makes inventory, months of supply, the important factor to look at. So with that said, the median days on market right now, it's actually up 38.6%. It's at 61 days. So still, yeah, it's up really high, but figuratively speaking, if 90 days is a stable market in 85254, meaning flat, even keel, 90 days when it's neither in the buyer nor the seller's ballpark, or it doesn't favor the buyer over the seller. Let's call that the even stable market for these purposes. If 90 days is even, we're still at 61. So that means that's still pretty low, and it's still in the seller's favor. So it's still going to be competitive out there. It might not be as competitive. Instead of having 8 people trying to compete for one house, you might have 1 or 2 or 3, depending on how you list the property and the strategy that you use, if that makes sense. But like I said, overall, it's still a seller's market. You just can't push those prices a little too much. You're going to be on the market a little bit longer. And keep in mind, it's 61 days. If 30 days is the length of a transaction, 60 days is nothing. In a month, you've got your house sold. And then the second month is just waiting. So the thing to keep in mind is that we're kind of in a little bubble right now where it's beneficial for both the buyer and the seller to be selling and buying right now. Buyers can get in at a lower interest rate, and sellers can sell at pretty much the high. If we have a correction, we may not see prices dip, but we'll at least see them stay even, if not go up 2 to 4%. But it's not going to be the 11 to 15 or even 19%, depending on the zip code or the neighborhood. If you guys have any questions, let me know. I love nerding out. I love the fact that somebody said, hey, what about my zip code? I love that. The other thing is I have buyers in waiting, not just in 85254, but in 85050 and 85050, 54, 254, 266, and 331. So if you guys have any questions, let me know. If you know anybody who's thinking of selling their home in 2019 or 20, let me know. I have buyers in waiting and still not enough inventory. And that's pretty much how the cookie crumbles today. Have a good day, you guys. Talk to you soon. Bye.